So you're looking for a way to save on your property taxes, and I've got a solution for you. It's called the homestead rule. This is Ron Wojciechowski for the Black Hole of Real Estate. And in Florida, they have a homestead rule. And what it is a way for you to apply for a tax discount when you purchase a home. So when you buy a home, you have up until December 31st to complete the purchase. So right now it's early in the year. You've got time to plan ahead. Now, if you did buy last year before December 31st, this also applies to you. So here's what happens. There is a Save Our Homes law that went into effect, long ago, because property taxes were increasing in such a way that people that own for 20, 30, 40 years were being forced to sell their properties, even if they're free and clear, because they couldn't afford the taxes. And that didn't sit well with a lot of people, so they created a rule called Save Our Homes. So now what happens is once you purchase a home, you can file for the homestead exemption. And you have until March 2nd this year, March 2nd, 2026, to make this application. So you've got a few weeks to take care of that. Now, this only applies if you bought by December 31st of 2025 for new homestead. And what it's going to do is going to cap the increase in the assessed value by 3% per year, no matter what. So if the market goes up 20%, you're capped at 3%. Now, the good news is that if you are just getting ready to take advantage of this, you've got some time. And what I want you to also understand is that if you bought a home for $350,000, they're going to take that amount and then they're going to look at it at the property appraiser's office, and they're going to have an assessed value, a just value. Now, the wives' tale used to be that it was 80% of the value. So if someone was to say I bought at $350,000, then maybe the taxable value, the just value, was $280,000. It's going to differ a little bit. But if we just took that number for a moment, it's not the full retail market value, it's the assessed tax value. Now, there's also something called a millage rate. And let's just say that's around 0.02, and you're going to look at this on the tax roll, and an agent can show you this, the property appraiser's office can help you out, or you can just check it out online. Go to the county property clerk's office, you'll be able to find that, and you see what the taxes are on it. But let's just suppose for a minute, if we just use this example of a taxable value of $280,000, well, then it might be like 0.02, maybe $5,600 in taxes. That tends to be higher than you might think. Now, this is everything all rolled into one. So in Florida, you do not have separate property tax, school tax, this tax. It's all in one thing. Now, within the millage rate, it's going to break down 10 or so different categories that you get taxed on. So without freaking anybody out about the taxes, I'm going to say go online, for instance, where nearby where we are, Volusia County Property Appraiser. You just type in that into the internet, and then you type in the address and you can see the tax bill for it. There's a phone number there. You can ask a lot of questions, and they're super helpful. So if you were just to be nice to them, and by the way, most people call the tax office and yell because the taxes are too high. So if you're kind of nice and say, listen, I was thinking of buying this house. Here's the address. So if I was to buy now, what would the taxes be? They give you a pretty good idea. Now, taxes can get reassessed, the year after the purchase, because if you bought a home that maybe did not have a sale in the last 30 years, taxes are probably super low. It's going to go up to the current value, and I think that makes sense to most people. Now, keep in mind, if you're looking for a property with low taxes, this is pretty much a level playing field. But if you see a property online and maybe you're looking at it and say, hey, they have no tax, it's most likely because it's a disabled veteran's benefit where they don't pay any tax or pay a reduced tax. And I want you to take a look at that as well. So there's a number of ways that you can save on the taxes within the rules that are easily accessible online, and you can also call in to find out more information about it. The good news is this. If you are owner-occupied and can demonstrate 6 months and a day in the property, then you can claim the homestead. Now, you probably can't claim it in 2 different states. So if this is your summer home, your winter home, or whatever vacation home it is, you probably need to decide which one's your primary residence and demonstrate that to get the proper tax discount. And also know that there are a few exemptions out there that may not carry through to the next person. So if the current owner is a disabled vet not paying taxes and you're not, the taxes are going to apply. So you get a break in the first year, and that's going to be okay, but then it's going to come back, to normal levels afterwards. Last thing I'm going to say on your property taxes, keep an eye on that in your mortgage, because if you're going to escrow your taxes and the following year comes in and the taxes do go up because of the situations we just mentioned, you can make it up and just write a check for the difference with your mortgage company for your escrow account, or they're going to probably increase your payment a little bit to make up for whatever's in, or so they can pay your taxes and, well, your insurance too when the time comes. That's only if you're financing, and it's only if there's that lower tax this year than the next year when you file. So to break it down for you, you have to buy and close by December 31st of a calendar year, and then you have until March 1st this year, March 2nd, in order to file for that discount. Now, I hope this helps you. And if you got questions, just message us below. We'll make sure to get you the information. Otherwise, just go online and check it out. That's a way to save on your property taxes. This is Ron Wojciechowski for the Black Hole of Real Estate.